Hi, I'm Hafeez Qazi and I'm here to take you through to the ACCA F5 revision mock debrief. Okay, so please keep your revision mock exams in front of you. Okay, so that we can be interactive, we can look into every single information and then we can solve or guide you about the solutions. Okay, so here we go. It's the question number 1 with the title Hexton. Always make sure that you understand the requirements first before you look into the scenarios, because requirements make you focused towards your reading the scenario. If your requirements are well and clearly understood, then it actually makes sure that you can apply that onto the scenario. Okay? As far as the scenario is concerned, it always changes from question to question, okay, and topic to topic. So make sure that understanding of the scenario is important, but on top of this, understanding of the requirements is a lot more important. Okay, so here we go. Let's start our revision mock debrief for F5. Question number 1 is requirement A. Explain the factors that should be considered when selecting a cost driver. And that's for 3 marks. Always remember, as far as the theoretical content is concerned, discursive requirements are concerned, always times them up by 1.5 as far as this paper is concerned. And that would tell you how many minutes do we have. So 3 times 1.5, approximately between 4 to 5 minutes you can afford on this requirement, okay? You can go over a limit, maybe 1 extra minute. If you can't squeeze it in 5 minutes, let's say 6 minutes, it's okay. Okay, we can't watch the time all this time. Okay, now explain the factors that should be considered when selecting a cost driver. Now here is your answer must be in couple of paragraphs, brief paragraphs. First of all, you've got to explain what a cost driver is. Like it's a factor which drives the cost within the organization. Okay, it's any base, it's any resource, it's any item of plant or machinery, or it's any function or any department which drives the organizational cost. Okay, once you have defined briefly what cost driver is, then with the couple of examples you would explain what type of cost drivers should be relevant to one activity and what cost drivers are relevant to another activity. For example, quality control cost, which is one overhead. Okay, that's normally driven through the number of inspections. More inspections, as in just-in-time environment, more the cost. Less number of inspections, less the cost. Okay, purchase department cost, purchasing, okay, number of purchase orders, etc. So that's how in selecting the cost driver, we need to make sure there is a cause and effect relationship. That soon as you change the cause, okay, the effect goes on to the cost. Okay, more and less number of purchase orders, more or less amount of purchasing activities. Okay, once we sorted this out, then we are looking at requirement B for 5 marks. Calculate the budgeted cost per driver for each of the overhead costs. Now, we know that how do we develop the cost drivers? The formula is very straightforward. All we need to consider is question 1, requirement B, cost driver rate. Based upon this, we look into the individual overheads for each activity for the period. Normally it is given a year, but it could be given on monthly basis as well. Okay, individual overhead cost for each activity for the period divided by total number of driver selected for the period. Okay, and that simply gives us cost driver rate for each activity. Now, going through the question, if I pick up one item of overhead cost and we develop how we will apply this into the cost driver rate. For example, you can see here is the cost of power given. Okay, cost of power given as far as this question number 1 was concerned. So let's suppose I'm calculating the cost driver rate for power, and same idea you can apply onto the stores, maintenance, machinery cleaning and indirect labor as well. Okay, as far as power is concerned, we are given as far as the original budget is concerned. Now please remember, whether it's absorption costing or it's activity based costing, cost driver rates or overhead absorption rates are always calculated using the budgeted figures. Okay, using the budgeted figures, not the actual results. Now here is the cost of power, which is 1,250,000. Okay, and we are looking at the drivers which are given here. Now a number of drivers are given. Okay, product details in terms of drivers. We have to select the appropriate one, which is very clear here with the name you can see as well. Power kilojoules per batch. Okay, kJ per batch. It's the unit of measure for the power, kilojoules. Okay, right, which are given for each product, WEX, TRI and WAG. Okay, now again go back to the formula. What does it say? Total overhead cost for individual activity, which is 1,250,000. Okay, or if you fancy, you can ignore 3 zeros if you like. Okay, divided by the total number of cost drivers selected for the period. Now, how they given us the cost drivers? They haven't given us cost drivers for the period. They had given us cost driver per batch. Okay, and we've got to convert them for the year. Meaning to say is 1.4 kJ per batch, and we need to know how many batches were there for the period, which are given right here for each product. So 36 batches for WEX times by 1.4, okay, plus 10 batches times by 1.7. Again, can you see I'm picking up the budgeted output, I'm not picking up the actual output. And then 0.8 times by 40, and the sum total is called as total number of cost drivers selected for the period. Okay, so that's what we were going to do. Divided by 1.4 times by 36 for the first product, plus 1.7 times by 10 for the second product, and 0.8 into 40 number of batches for the third product. And that gives us cost driver rate. So using the calculators, we get something like $12,575 per kJ. Same thing you are going to apply for other overhead activities as well. Okay, individual overhead for each activity divided by the total number of drivers selected for the year. Okay, if they are given per unit, convert them into whole year. If they are given per batch, convert them into whole year. Please remember this. Okay, once we sorted this out, now we're looking at the second requirement, which is prepare a production overhead budgetary control report for April using an activity-based approach. Okay, now you read the question already. Okay, so that's why I'm picking up only the relevant parts. Prepare a production overhead budgetary control report. Now, what is this budgetary control report? Without even looking at the question, budgetary control report always works in this way, that right at the beginning of the year we have our budgets. Is that okay? Right at the end of the year we have actual results, and we compare our budgeted results with the actual results to calculate a variance. And that report is called as budgetary control report or budgetary control operating statement. Okay, always budgets, actual results and the variance. Now in budgeting, one principle works that before we compare original budgets with the actual results, okay, it's relating to this question and it's relating to overall management accounting or accountancy. Okay, so I'm not just saying something about this question, any other question, budgetary control report works in this way. Original budgets, actual results variance. Now the principle of the variance analysis is that we actually apply flexible or flexed budgeting approach in order to make the situation like and like, because original budgets are set on a different level of activities, actual results are achieved on a different level of activities. Okay, so we apply this retrospectively. Original budgets are flexed first, they are revised first, and then those revised and flexed budgets are compared with the actual results. Okay, now flexible budgets in the chapter number 5, you remember how flex budget works. Okay, we calculate the budgeted cost from the original budget per unit or per data, and then we multiply this to the actual activity to get the flexed budget. So let's have a look at how this would work out.